Dog's barking. That can only mean one thing. The mail's here. Yeah, we got another Reddit mailbag episode. And just a reminder while you enjoy, this is not advice. I'm not your advisor. We're back. More Reddit Q&A. This time, raspberry sour. It makes me make the same face I get when I'm reading some of these questions. New dad here. I need advice on all the things I should do for my daughter financially. I'm a new father, and I don't really know where to start when it comes to setting her up for success. What can I do that will benefit me by losing taxable income while helping her, etc.? There's not a lot that you're going to be able to do that's going to benefit you and help her. But there are some things that are useful. So 529 plans are what basically they're the state of the art for college savings these days. They're what almost everyone recommends. There's some other options, but very rarely do they get used, especially if you're a relatively high income earner. What you do need to definitely look up, and I don't know state by state, some states have a tax benefit for the first X dollars. 5,000 is pretty common, that you put into 529 for someone each year. So then you would get benefit for you while helping her. Usually it's just against the state. There's no federal benefit for that. But that's what everyone uses. I don't know if the Wisconsin plan is any good. You can look it up. There's lots of rankings. If they're not, you're actually not tied to the Wisconsin plan. You can use any state's plan. And if there's no tax benefits, then it really doesn't make a difference. The other thing to look for is if there's a special plan for in-state colleges, but I mean, that really kind of ties you down. But worth looking into. Otherwise, there's not a lot. I mean, you being financially set is what she's going to want when she's the age that you are now. She's just not going to want to have to worry about supporting her parents. Planning on starting my emergency fund. I have a question. What exactly should be considered a budget for an emergency fund? Bare essentials, total? Yeah, I mean, it doesn't really matter, man. You're probably overthinking it. I'll scroll down so everyone can read the bottom. It doesn't really matter what it is. I mean, if it's bare bones, then it's bare bones. If it's a little more, it's a little more. If you're aiming for 6 months, then it probably can be more like bare bones. It doesn't need to be 6 months of what you normally spend, including a vacation or something like that. But there's no right amount of time to build it. There's no right way to do it. I guess the thing to think about today is make sure you're putting it somewhere where it's getting a little bit of return. You can get most money market type accounts are yielding over 2% right now. But if you just put it in a regular checking account, it's going to get basically nothing. So something to take a look at, but there's no right or wrong answer. Exceeded Roth income limit for several years. And make it a habit on January of every new year to contribute the maximum to a Roth. That's good. Awesome. However, it never occurred to me to check the modified adjusted gross income limits, which it appears I've exceeded. I know from reading other posts that I should do the backdoor Roth technique for my current 2019 contribution, but I guess my questions are the following. What should I do for the past 2 years? Do I need to go back and amend both of those tax returns? Well, a Roth contribution doesn't hit the tax return, so there's nothing to amend. How would the IRS know I exceeded the limit? Well, it's because Vanguard would report that. Vanguard clearly doesn't stop me from contributing, right, because they don't know what your taxable income is, just like you don't at the beginning of the year. And because Roth contributions provide no deductions, it isn't included in my tax return. That's what you just said. What is the mechanism to enforce the income limits? Yeah, so no professional is going to advise you on the risk of audit, which is basically what you're asking. But if you wanted to fix it, in most cases, you're not going to end up getting penalized. You can say, hey, I'm fixing this. I'm kicking it out of the Roth. Seems like worst case is you end up paying some sort of penalty on the excess contributions, but I don't really know. I feel very financially safe. What else should I be doing right now? I'm making this post because I feel like I'm doing amazing with my finances. Nice. But I want to make sure I'm not missing something. You have $40K in a high interest savings account, $3K in a Robinhood account. Almost maxing out your 401k. Nice. With 18% of income, including employer match. That's a little confusing. You might want to look into whether you understand the limits correctly or not, because there's a limit for you, which is going to be $19,000 or 25 if you're old enough. You're probably not over 50 because no one on Reddit's over 50. But the employer match doesn't count towards that. There's a separate employer limit that's like another, I don't know, 35,000 or something. So you should make sure you understand that because you might be able to put more in there. Only day you have your mortgage. Nice. Pay off your credit card every 2 weeks or so. Well, I mean, if I were you, I would just set it on like auto pay and just let it go every month so you don't need to like hassle yourself. But that's up to you. Salary's around $92K. 2 separate 401ks from different companies. Yeah, I mean, it's probably fine. At some point, you'll just want to consolidate those. If your current 401k is a good plan, you can roll them in there. Or you can get them in an IRA. You'll have to learn how to invest that yourself. But there's plenty of resources here. It sounds like you're moderately comfortable with it. But, I think the next thing is putting a little bit more of those dollars to work. How much do you want? That the 40K in a high interest savings account, how much of that do you really need to be in cash? I mean, what big expenses do you have upcoming? Or you think about buying a bigger house? You're probably getting a lower rate of return on that than the interest you're paying on the mortgage, even after factoring in deduction, if you're even getting that deduction. So, I don't know, things to think about, but you should probably start considering saving outside of that. And like I said, maybe you're not even maxing out the 401k. Balance of being smart and enjoying life. I don't see exactly what's the trade-off between being smart and enjoying life. I think a lot of people would define them as related. Okay, we'll read the question. I see so many posts on here about whether a purchase makes sense, but how do you balance that with enjoying your life? Well, before I read any more, so a lot of people have found that if they buy something they can't afford, that extra stress ruins that thing that they bought. It ruins the pleasure from it. So they found that even if it's something they think will be fun, it doesn't turn out to be fun if they put themselves in a stressful financial situation. So that's the way a lot of posts are going to guide you here. You also want to enjoy your life, even if that means things that don't necessarily make sense financially. Okay. Yeah, I mean, if you're saving enough that you're on track to be able to retire at a reasonable age and spend reasonably in retirement, then it sounds like you might have a healthy balance. But if you're barely saving anything and you're, talking about how happy you are that you get to go out to a, expensive dinner when your friends are going to get to retire when they're 60, like we'll see who's happier, 20 or 30 years from now. But I don't see it as really a push or a pull. Looking for low risk, highly liquid investment options instead of my savings account. I'm 25, 36K in a savings account. Man, people have serious savings account these days. Getting 26 cents a month from interest. Yeah, that's not very much. Plan on buying a house. Your mutual funds and stocks. Yeah. Yeah, I mean, there's plenty. And almost anywhere you look will get at least 2% interest. Capital One, Schwab, Vanguard. I mean, if you're going to put it in a big brokerage house like Vanguard or TD Ameritrade or Fidelity or did I say Vanguard already? You'll have to probably invest it yourself, or you could go anywhere that it's a high yield savings account or even a high yield checking account. It's probably going to yield a little more than 2%. So just look it up and put it there. You're going to have to move it though. Starting a retirement fund with 50K. Should I do a mutual fund only? I have 50K to put in a retirement account. I understand IRAs are recommended. The contribution limit is 6K per year. It sure is. 401K at work I contribute to for an employer match, but no other investment accounts. I'm married. Child. money into a house. As I understand it, I can't just dump 50K into an IRA or 401K, so that leaves mutual funds. All right, well, you're a little confused here because mutual funds can go inside of both of those accounts. You're talking about is just a regular taxable brokerage account. So I'm leaning towards Fidelity, like my 401K, or Vanguard ETF fund. See, ETFs and mutual funds, those are different things. I mean, they're basically the same. They're very, very similar. But a mutual fund and ETF are the same idea. But they both go into a taxable brokerage account if they're not a retirement account. What's a smart thing to do? I think it's better to keep investing in one retirement vehicle so you get better compound returns than if I split contributions. That's not how it works. The math's going to work out. If you run the numbers, the math's going to work out exactly the same. You're definitely wrong about that. Today I learned how compound interest works. Yeah, okay. You got it. I can still contribute the max. Yeah, so if I were you, what I would do is definitely use the IRA. It's too hard to say without knowing more if Roth or traditional is better, but that makes a lot of sense. Maybe you can do one for your wife too. And then what I would do is max out the 401k contribution using some of this cash. So you're probably not going to be able to directly put it in, although as it sounds like some people said, you can put after-tax contributions, but it doesn't sound like you're at a spot where you should worry about that. What I would do is use this for some of your regular spending money. Increase your deferral so you're maxing out the 401k contribution. Do that over a few years. And in the meantime, sure, put whatever the balance of it is, whatever the rest of it is, into a taxable brokerage account at Vanguard or Fidelity, whatever you prefer. It doesn't really make a difference. I would keep them all together if it were me. So I would just use Fidelity. They're just as good. Their Spartan funds are excellent index funds. And put them there. And then if you can decide at that point, do you want to sell them? If they're at a gain, that'll be a little bit harder of a choice, a year from now when you're making your next contribution to the 401k. But that's what I would do. I would increase your 401k contribution so that you're doing the max instead of just getting the match. And so use the cash that way. And you can consider using it again in 2020 and 2021 in the same way.